Hi, my name is Michael Richards, and this is Kate and Sam. So, I did their 1040 for the 23 year, and I got their adjusted gross income here, added their standard deduction here, and got their taxable income. I also did their Schedule A, their itemized deduction, and deduced that the standard deduction would be better for them. Here is the investment opportunities that I made for them. The municipal bonds are going to be their best choice out of the three. And then here is where I went over their different tax expenses and how they weren't deductible and which were deductible, and told them that their standard deduction would be the best route for them. I also went over their investment opportunities here, telling them that the municipal bonds will be the higher rate of return and that it is not going to be taxed. And then I went over a little bit of their vacation home and what they were considering, and I told them that this could be a good option for them because it can be deducted on their taxes as long as they are spending at least 14 days or more than 10% of the year compared to when it was rented out. They will be also able to deduct the rental expenses on their taxes. So this is my presentation of their taxes and their investment opportunities.